Okay, so we are live on YouTube, Facebook, our business Facebook, I should say, my personal Facebook, and our YouTube channel, which is at Our Mortgage Broker. I am joined by the very smart-looking Deepesh, specialist mortgage broker at Our Mortgage Broker. Thanks for joining me, Deepesh.
Thanks, Akhil.
Good to see you wearing a blazer, and I've sold you out there. I'm so sorry.
That's no problem.
Good to see you. Good to see you. So, how's life treating you?
Yes, life's been good. Been busy.
Yeah.
We thought things have started calming down, but hasn't calmed down. It's still busy as ever. But
good. How's the energy prices treating you? How's the energy prices treating you?
Energy prices. I've been fortunate. I've got solar, so I've been touch wood have been okay with my electric at least. But yeah, it's
all right.
It's higher than what it was anyway.
Well, that's good. So can I give your account details to British Gas to pay for my direct debits?
Sure.
That's very kind. Thank you. Okay, good. So for those of you that are joining us for the very first time on Facebook and YouTube, my name's Akhil. I am the specialist mortgage broker here at Our Mortgage Broker. We have a great team that supports the brokerage that we are. As I said, we've got Deepesh Sharma, who specializes in all types of mortgages, buy-to-let included, residential homeowner, bridging and commercial mortgages. As a business, our core strengths are real estate property finance here in the UK. So if you are a first-time buyer, if you're a buy-to-let landlord, if you are a commercial investor or a trading business in the commercial arena, you should, and we would like to hear from you with any inquiries that you're looking to acquire properties as well as refinance properties. And the reason why we've decided to do this call this afternoon is very simple. And the reason the topic that we're going to be discussing, I should say, is quite an ear topic at the moment, with interest rates going up and up and up at the moment. And we're probably in due course going to be seeing another rate increase, I should say. So the topic of today's chat is, my mortgage deal is ending soon. What can I do? So Deepesh is going to give us a bit more insight into, as mortgage holders, what are our options when it comes to mortgage deals expiring very, very soon, and mortgage deals ending very, very soon. What are the options from the borrower's perspective? What do lenders look for? What does the process look like? And everything in between. So what I'm going to do is, if you are live and you're watching this, please feel free to drop any questions that you have in the comments box. We'd love to hear from you. If you want to visit our website for more information on our company, it's ourmortgagebroker.co.uk. Feel free to get in touch there. If anybody has, as I said, any questions, please do get in touch with us and we'll do our best to answer those questions for you. If anybody's got any other questions, you can contact us directly. You've got Deepesh's mobile number there. And as I said, you've got our website and our email address, which is akhil@ourmortgagebroker.co.uk. So let's get this moving. So Deepesh, I'll put some questions together because we're hearing these questions coming up more and more over the last few weeks, few months, and everyone is keen to secure the rate switch sooner rather than later. So just give us a quick brief to what is a product transfer, when should clients think about us, and what should they be doing?
Okay, great question. A lot of people are already on the standard variable rate. There was actually a survey showing recently that at least 370,000 people are still on the variable rates, which is quite a lot of people.
How much?
370,000 people.
Holy moly. So let's put that in context. 370,000 people are probably paying well over the odds. Even in a peak rising market at the moment, we're finding they're probably paying 5-6% on a standard variable rate.
That's right. It's quite scary. So yes, there's a lot of people on that, and a lot of people coming to the end of their variable of their fixed rates and not really sure what they need to be doing. Mm-hmm. So there's three options you can do. One is to come to us, and we can either arrange a product switch or a product transfer with your existing lender and do a straightforward swap with no additional borrowing, or we can even do extra borrowing if you need to. So stick with the same lender. Very straightforward process. we just go and check the current rates and we do the switch for you. The second option is we can have a look to see if there's any other lenders that have a better rate. So we'd switch you to a different lender that has a better rate if it makes sense, if it's going to save you money in the long run. So again, we can do a straightforward pound for pound remortgage or a capital raise with a new lender. Or the third option is do nothing and stay on the variable rate and pay the extra, the high rates as they are, and they're going to keep going up with interest rates going up again, possibly tomorrow, and it may be another 1 or 2 times this year again. So, not a wise move to stay on the variable rates, but get in touch and we'll talk you through your options.
No, thank you for that. And what stuck out from me was that obviously that stat you mentioned, 300,000 odd people, mortgage holders on standard variable rates, which is it's scary, to be honest, because we're going through a cost of living costs are rising every day with energy prices, fuel prices, and interest rates as well, and we're not making as much as we should be doing in our savings accounts and deposits. So there's a bit of an imbalance, I should say, with the cost of borrowing to what we're earning in our bank accounts with savings. What I wanted to allude to there was this goes for both sets of clients, whether it's for their homeowner mortgage, the main residence, and buy-to-let, right? So those options apply for both sides of the spectrum there.
Yeah.
Good. And then when like, for example, so I appreciate, and probably you do as well, like some people want to stay on a standard variable rate because they may be selling that property. And because they're selling that property, they don't know when that's going to happen. But if they're tied into that deal and they're selling that property, they're probably going to have to pay an early repayment charge. So hence why they may still want to remain on the SVR rate.
Yeah, correct.
Yeah. But the vast majority of homeowners, buy-to-let landlords would want to be in a fixed rate deal just simply because they secure their rate for that given time. They know what their fixed mortgage payments are going to be on a monthly basis. So it's understanding what the goals look like. So no doubt you'll have those conversations with the clients to understand their short, medium, and long-term goals when it comes to property investing.
Yeah. What I will add on to that is, if you are looking at moving property or whatever, it's worth speaking to us or to your lender about porting, because you could move to the new deals, new fixed deals, and then port your current mortgage to the new property. So it's worth having a look at, if it's going to save you a lot of money in the long run.
Sounds good. Thank you for that. Another question that always crops up. Now let's look at it from a residential. So I own my own main residence. Should I go interest only mortgage or should I do repayment mortgage? What's your as a client, I'm asking you, you're my advisor, what would you suggest if it's for my homeowner mortgage?
Well, it depends on various situations. So what sort of property is it? Is it a residential you live in, or is it a buy-to-let property? Yeah. So if it's a residential property, most buyers would go with the repayment to ensure that the mortgage is paid off at the end of the term.
Yeah.
So it's your main residential property, mortgage paid off at the end of the term. You're not having to worry about what happens come the end of the term.
Yeah.
There are a few lenders, however, that do allow interest only on a residential basis, on a residential home. So you'd have to have a large amount of equity in the property, usually at least 50% or more. You'd have to have a high enough income for them to justify, and you'd have to show evidence of how you wish to repay the mortgage at the end of the term. So there's various things you could put down. Some are downsizing, sale of property, whatever, or just savings in the bank account. So, but we can talk you through the options. Every lender's got a different criteria on that.
Sounds good. And for interest only, is that interest only mortgages more geared towards owner occupied residential or more buy to let?
So interest only more on the residential. So now if it's a buy to let property, most people would go be the other way around. You'd go on interest only on a buy to let property as opposed to residential, because what you want to do is use the income the rental to generate income, and obviously build your portfolio or money to live off. And the repayment vehicle on a buy-to-let property, because you're not really living in it, would normally be sale of security property.
Yeah.
A lot of lenders allow you to make up to 10% extra payments. So if you did want to repay it, you've got the option of making those extra payments on the remortgage. On the repayments, you can make up to 10%. If you wanted to get that paid off, or just leave it on interest only as it is. However, again, there are some lenders that will allow you to do a repayment on a buy-to-let property, where you can make monthly capital and interest payments for the term of the mortgage to ensure the property is paid off at the end of the term, if that's what your end goal is.
Okay, good. So in short, capital and interest mortgages for your homeowner mortgages, that gives you certainty that by the end of a certain term, or up to the age when I become 60 years old, for example, my house becomes unencumbered, debt-free, and I've got no mortgage payments to be made. For buy-to-let investments, buy-to-let mortgages, traditionally everyone goes for the interest-only option, simply because it helps with the cash flow. It gives them a higher income, and then that allows them to save that money and redeploy that into further real estate going forward. So, no, thank you for that. There's another mortgage terminology that comes out quite a bit, is a let to buy. What's a let to buy, and what's the difference between a let to buy and a buy to let?
So, yeah, good question. So, buy to let is, as it says on the can, a property you buy for the sole purpose of letting it out. You need 20 to 25% deposit to buy the property. Okay, so it's property purely buying it for the purpose of letting it out. A let to buy is a property you currently live in that you're looking to let out to buy another residential property. So you'd let out your current residence property and you buy another property for you to live in. Yeah. Normally, most lenders would need this to be done simultaneously, where you move out of one property and move into the next property at the same time. Okay. There are some lenders that will allow you to, on a temporary measure, to move into temporary accommodation, but very few. But generally, it's moving out of one and into the other at the same time. Obviously, when you're moving into your next property, there is you will now become a landlord, so you'll be having the extra stamp duty to pay, but you don't have that. You don't have the stamp duty to pay on your current property, which is on the onward purchase. So yeah.
Okay, that's great. So there are options out there. So for listeners and viewers of our channel, if you own your main residence, but you still love this property, it could benefit you with cash flow as a buy-to-let, you can change your current home to a buy-to-let. With those funds that we could potentially raise for you, use that money for a deposit towards your new home purchase. So you're letting out your current residence in order to purchase your new home. And what happens there is usually every lender wants that transaction to happen simultaneously. We could opt for the same lender to convert your current home to a buy-to-let, and they'll do your onward resi purchase, or we'll go with separate lenders. But again, we have access to a wide range of lenders in the market, and we'll do our utmost to provide you with the most cost-effective products to make sure it meets your goals. Thank you for that, Deepesh. So what we wanted to do is we wanted to just quickly put out this video because lots of mortgages are coming up for renewal. A lot of borrowers, I should say, took out mortgages in 2017 because of the tax changes in Section 24. Those clients are coming up to renewal of their 5-year fixed mortgages in the buy-to-let space. So we're keen to hear from anybody that has got buy-to-let mortgages coming up for renewal in the next 12 months. Please do get in touch with us via the website, ourmortgagebroker.co.uk, or you can also contact Deepesh or myself to discuss your mortgages that are coming up for renewal very, very soon. Just a quick update on just the general market at the moment. Yes, interest rates are going up weekly at the moment or daily with most lenders. It's not fun. It's not fun for us, but it's just the way the market is, unfortunately, at the moment. The Fed are making a rate decision later this afternoon, and today's the 21st of September. So there's a rate decision by the US. There's the Bank of England, closer to home for us here in England, making a decision tomorrow. Last week we had Mitesh on the video. He predicted a 0.5% increase. I said 0.75. So Deepesh, what do you think? Up, down, how much?
Yeah, no, I think definitely it's going to go up. I think the market's predicting 0.75, so I think I'm going to go with you on the 0.75 there. I think that's where it's going to be.
0.75. So maybe Mitesh, if he loses, he buys us both lunch.
I think so. Yes.
Sounds good. So we've got interest rates going up, cost of living going up, but let's look at the positives. we can't help the economy in terms of we can't dictate what the Bank of England do, but what can we do as advisors? What can we do as property owners? You and I are both landlords, we're property owners. What can we do? For us, it's key is working alongside our power team, speaking to the right people to plan in advance. If you're looking to buy a home, you're looking to get onto the property ladder, talk to us sooner rather than later, because we'll point you into the direction, what documents we need from you, where does your income need to be. If you're self-employed, can we use salary and dividends? If you are self-employed, can we use salary and profits before tax or after tax? And these are the conversations we're going to be having, what we do have on a daily basis with our clients. And it's unfortunate that we speak to a lot of clients on a daily basis, and they're under the impression that my bank can't help me, therefore you can't help me either. But what I would like to say is we're quietly confident that we probably can help you, or if not, provide you with some solutions or some processes to go through to obtain where you need to be in terms of mortgage sizes within your time frame. So from our perspective, we're an independent mortgage brokerage. We've got access to a wide range of lenders who do various things. So if you're looking to buy your first home or move home, up to 95% loan to value mortgages. If you're looking to buy a buy to let or remortgage a buy to let, you can borrow up to 80% on a buy to let mortgage. These terms are all subject to income and affordability, rental stress test, and all that weird and wacky stuff that goes on in our marketplace. But what I say to our clients, and what we all say to our clients at OMB, is leave the finance headache to us. That's our job. We will just ask from you the necessary information, the necessary documents. It's our job to go out there, work for you, and find you the best deal possible. So that's my quick 60 seconds of explaining how we like to help our existing clients as well as new prospects coming aboard as well. The market, as Deepesh quite rightly said, we are still extremely busy. Lenders are still openly in the market. They're very aggressive in terms of lender criteria, the types of properties that they lend on, the large portfolios, whether it's personal name, limited or limited company. So there are various lenders for various types of deals. All we ask from you is give us a call, drop us an email, get in touch with us, and we'll do our best to support you going forward. As I said, this recording will go on our Facebook and on our YouTube channel. If anybody has any questions, feel free to get in touch with us directly, and then we'll do our best to answer that. But Deepesh, thank you so much for your time.
No problem.
I know that you've got lots going on, so I'm going to let you crack on, and we look forward to seeing you soon.
Yes, thank you very much. Hope to see you soon again.
Pleasure. Thanks again. Bye-bye.
Thanks a lot. Cheers. Bye.